As usual, thank you to those that keep on coming back to these spaces that I run daily with various thought leaders. I had Fernando Ferreira quite a while ago, and a lot changed since we last did these spaces. I will have this as a podcast probably in a couple of days or so. Stay tuned for that on all your favorite platforms under that Lead Lag Live brand name. My name is Michael Guyad, publisher of the Lead Lag Report. Joining me for the hour is Fernando Ferreira, who is a fellow CFA charter holder and knows a little bit about Brazil. Fernando, introduce yourself to the audience. Who are you? How'd you get involved in financial markets? And are you glad about Lula?
Thanks, Michael. Thanks for the invitation. Happy to be here again. So I've been involved in equities and the markets for about 20 years. 10 of those years outside Brazil, between the US and London. I've been an equity analyst pretty much since I've joined the market. So always done equity research, and nowadays since 2020. I'm the head of research and chief strategy for XP. XP is the largest brokerage firm in Brazil. So we trade both for retail clients as well as institutional clients, both Brazilians and also global. So yeah, happy to help you to discuss the outlook in Brazil and this increased volatility, right, that we're seeing in the last couple of weeks.
Yeah, I'm sure some of that has to do with the election results, but set the stage a little bit for the audience, broadly speaking, when it comes to how to think about Brazil. What are some of the main sectors and industries that the Brazilian markets tend to be more dominated in? And what's the broader case for Brazil from an investment perspective?
So Brazil has been very attractive, and you got this call right. So kudos to you. I mean, you've been talking about Brazil for a while now. And the reason for that, I mean, first of all, I think the sector exposure, as you mentioned, I think it was a key reason why investors started to look at Brazil in a different perspective, right? This year, it's because when we look at the indices level, right, we see pretty much three big sectors that dominate the indices. So about 70% of the EWZ, right, the largest ETF in Brazil, is composed of financials, number one, number two, commodities, and number three, utilities. So those three sectors, but primarily financials and commodities, right? Those are sectors that are not as sensitive to rate increases, right? To a scenario of higher rates. Those are sectors that they perform well under a high inflation scenario, and those are sectors that are not as sensitive as the tech sector, for example, right? So this huge exposure to those sectors definitely made investors look at Brazil in with different eyes this year. It used to be, right, negative for Brazil. It used to be a headwind that Brazil didn't have much discretionary, didn't have much tech in its index, and people would switch into China or even NASDAQ, right, in the last couple of years. And Brazil has underperformed as a result. But this year, right, given the macro environment of higher rates, higher commodity prices, Brazil has definitely gained a lot of attraction. And this resulted in so far this year in a record level of inflows from foreigners buying Brazilian equities, which is roughly around $20 billion year to date from net inflows from foreigners. So definitely that has helped, right, the performance of the market, which nowadays year to date is up about 10%, slightly less than 10% year to date. So this is the first reason, right, the sector exposure. The second reason I'd say is valuation. So we are seeing the market, Brazilian equities, trading at 7 times earnings or slightly less than 7 times earnings. If you take a long-term average, the market used to trade at around 11 to 12 times earnings. So definitely a huge discount that we're seeing. Different than the S&P or different than the rest of the world, Brazil already started 2022 being very cheap, which is the opposite of global markets, right? That started 2022 at a very expensive level. In Brazil, we started this year already at pretty cheap levels, and we've stayed cheap for the entire, right, for the whole year, because earnings have grown this year because of commodities and because the domestic economy has been pretty resilient. So we haven't seen any multiple re-rating in 2022. So multiples are still pretty cheap. So that's the second reason I would highlight. The third one that has attracted a lot of investors to Brazil is the fact that the country, and I would say the region as a whole, LATAM, we're very familiar with inflation, right? We've seen inflation and we've experienced high inflation for many decades. So we know that when inflation spikes, it's hardly transitory, right? And the central banks here, they've started to hike rates earlier than everyone else, right? Than other central banks in the world. So that led that our interest rates went up from 2% to almost 14% now, so 13 and three quarters. So a major hike in the last 12 months. So as a result, Brazil now has one of the highest real interest rates in the world and the highest nominal interest rates in the world, right? Which is comparable to countries that are in a much more difficult position like Russia or Turkey. So that also attracts a lot of investors that buy the FX, buy fixed income, but also investors that buy the equities, because you know that once a country has very high level of rates, that the currency probably won't depreciate that much, right? That it's very expensive to short the Brazilian real given the very high level of interest rate. So this is a third reason I would say that people looked at Brazil and say, well, Brazil is ahead of the curve. Other central banks are way behind the curve, so it makes sense to look at Brazil and be more optimistic there. And I'd say fourth and probably last reason is the fact that the world has much bigger problems, right? When you as a global investor, you look at China, you look at Europe, even the US, and people see lots of issues, risks of a global recession, risks of recession next year, energy risks, the war is still ongoing in the Ukraine and Russia. So some of those markets became uninvestable for global investors. So people are looking at where to park that money, right? And especially given what's happening in China, and China is a major constituent, right? A major component of the global EM indices. A lot of investors have switched out of Asia, out of China, and looked at Latin America, right?
I was going to say that I have to assume part of that. Yeah, I was going to say part of that record inflow, I'm assuming, is because you don't have the BRICS anymore, right? You just have basically the B and the I, right? You don't have Russia, and China is scary for a lot of people, right? So the natural beneficiaries then of anybody that wants to bet on that BRIC idea of old, the money has to go somewhere, so it goes to you guys and India. Is
Correct.
that inflow coming from any particular part of the globe? Is it primarily U.S. money? Is it European money? What's sort of the breakdown of the foreign interest in Brazil?
Yeah, it's a good point. I'd say it's mostly U.S., but definitely some European money as well. More recently, and I would say most of the investors that bought Brazil this year are not the dedicated, let's say, LATAM based investors. They are mostly like global investors or emerging market investors that look from a broader perspective at the world, right? Which means that if future economic policies do deteriorate in Brazil, this money can certainly go out, right? I don't think that this money is sticky in the sense that it came to stay for 5 years, and it's definitely a long-term investment. I think people bought Brazil as a trade, right? Given the global macro scenario. But if it going forward, and maybe I'm jumping to our next point here, but I think it will depend, right? If this money will stay or not, it will depend on future economic policies and how they evolve from here.
Yeah, and that's a good transition to Lula and the election. Explain to the audience, for those who are not familiar with Brazilian politics, as non-political as you can, sort of the two schools of thought that Lula and Bolsonaro kind of brought out to public. And it seems to me, from what I've seen, that there's maybe some discontent or concern around Lula, given that he won. But talk through the dynamics there, and if it means, from a policy perspective, to your point, it's a more friendly environment.
So I'd say, first of all, when we look at the pandemic and what the pandemic caused in terms of political shifts in the world, definitely we saw the population globally, right? Globally speaking, we saw people asking for more government support, more social policies, right, and a bigger government at the end of the day, right? So we definitely saw a lot of left candidates winning, right, their elections in several countries, right, in recent months, definitely post pandemic. We saw that in the US, we saw that in Colombia, we saw it in Chile, in Peru, several countries, especially in Latin America, moved towards leftist parties, and that was also the case in Brazil, right? Brazil was being governed by a right wing politician, right, with Bolsonaro. Now Lula has won the elections and is expected to start, right, his presidency in January. So this will be the third term for Lula, but it will be the fifth time that the PT, the Workers' Party, the Labor Party has the presidents in Brazil, because Lula stayed for 2 terms, and then his predecessor Dilma Rousseff then stayed for another two terms. Initially, so when we look at an election year in Brazil, historically we usually see a pretty volatile year. So when we look at asset prices during election years, there is definitely a pattern of higher volatility for Brazilian assets, and that makes sense, right? When you think about it, well, it's an election year, so people are paying a lot of attention to it. So depending on where the policies and the economic agenda goes, right, then asset prices will be more volatile. But this year in particular, we haven't seen much of a volatility during the whole election period, which was very unusual, and we were wondering why the market wasn't volatile this year. Let's say probably for 2 reasons. First of all, I think the market was not very worried about the elections. They thought, well, the 2 candidates are known, right? The 2 candidates, one is the president, one is a former president. So there's probably very little tail risk in this election, right? There's very little risk of a big unknown on this election. So this was I'd say the first reason. And another one related to that is the fact that Brazil got a ton of inflows, right, from foreign investors this year, which definitely has helped to dampen the volatility, the usual volatility that we see during an election year. But past the elections results, this new government that will start in January, they do have to approve their budget for 2023. Obviously, a lot of promises were made by both Bolsonaro and Lula regarding social programs, but those promises, they're not accounted for on next year's budget. So it's a very unusual situation that the new government has won the election, but they already have to approve an extraordinary budget or an amendment to the current budget for next year, which is completely unusual, right? Because they haven't really started their government yet, and they already have to negotiate with Congress for this new fiscal program. And the signals, or actually the initial package that was announced yesterday and this week, has been definitely much bigger than the market was expecting. So I'm calling this. I've been saying that Brazil is facing a Liz Truss moment, right? So Brazil is facing a UK moment currently, because markets are behaving pretty badly, right? During what was announced, Brazil already has, and I think we spoke this the last time, but Brazil already has a pretty high level of debt to GDP at around 80%, give or take, and definitely an increased deficit going forward can definitely bring this number much higher, right, in the next couple of years. So that's why our assets are performing so poorly. That this new announcement definitely took investors by surprise. Most investors had the view that the new government, if it was Bolsonaro or Lula, would be pragmatic and would keep the fiscal responsibility. But so far, what we've seen in terms of the initial proposals has definitely scared the market, and that's why we're seeing this volatility. Now, this amendment hasn't been approved yet, right? So it still has to be negotiated with Congress, and a lot of changes can still happen in the next couple of weeks. But I would certainly expect volatility around this whole debate. So this year's harvest is already on the ground, right? So we already planted the big harvest, the summer harvest, and the harvest will start early next year. And so far the conditions they look pretty good as far as I'm hearing. I'm not a a huge ag expert, but we do have analysts in our team that track this pretty closely, and it seems that it will have another pretty good harvest in Brazil. Obviously, considering if there's no major climate issues, but if we do see another record year in terms of grain outputs in Brazil, that will mean that farmers and the farmers' economics will see another very strong year. So we're probably seeing the fifth year of very strong farmer economics in Brazil, right? Because we've seen a scenario where the currency has depreciated at the same time that ag prices, right, and grain prices have gone up quite dramatically in the last couple of years. So that has been a very, very favorable scenario for Brazilian farmers. This year, right, we had a big concern when the war started in the Ukraine, because Brazil has to import over 90% of its potash use, right, and more than 50% of phosphate as well. But farmers anticipated the purchases, and we haven't seen any issues on lack of supplies, right, of fertilizers or chemicals. They were able to get all the inputs that they needed. So what I've been hearing is that they have been applying a good amount of nutrients, and they do have a pretty good balance sheet, I would say. They're in a very healthy financial position. So if we do see a bumper year, right, in terms of lower crop prices next year and higher input prices, definitely that can be a problem. But I'd say they are in a healthy position. I wouldn't be very concerned, given the last couple of years have been pretty strong. Yeah, no, great question. I think the intent is definitely to have more protective laws of the environment, and I'd say the ESG agenda probably will gain ground under Lula. But having said that, I don't expect the government to go against the agriculture sector or to try and curb grain exports. I mean, Argentina did that, and it's definitely a policy that it goes against, right, the entire country, because then the currency depreciates a lot. You hurt your current account balance quite substantially, and also one very important factor is that the agricultural sector has a huge support in Congress in Brazil. So Lula, despite the fact that they won the presidential election, Congress composition is not very favorable to the left wing parties, which means that they will have to form coalitions with the center parties, and the agriculture sector, they have a very strong support within the Brazilian Congress. So I definitely wouldn't expect many laws that would go against the agriculture sector. But having said that, I definitely do expect more laws to try and protect the Amazon forest, and to try and protect more let's say the whole environmental agenda and sustainability. That's one of the pillars for Lula's government, but I wouldn't expect many, let's say, policies against the agricultural sector.
What's been the response on the ground by Lula's win? Meaning, you talk about XP being the largest brokerage firm in Brazil. Are you seeing suddenly a lot more trading activity, a lot more buys, a lot more sales? I'm just curious what's money actually been doing in the lead up to and now with the presidency.
Sure. So in terms of inflows, we've seen local institutional investors and better on the sell side, and so more selling from local institutions. Local retail has been mixed. So we've seen local retail investors selling throughout this year when the market was going up, and people switching into fixed income because of how high, right, interest rates are in Brazil. So it wasn't really related to elections; it was more related to the relative rates. And more recently, we've seen retail investors starting to buy again, which might be as a consequence, right, of prices of equity prices coming down. So this has been, right, the key trend so far this year. If the local money will come back to equities in a big way, I think will depend not only on the government's policies, but also on the rates outlook, right? If the Brazilian central bank is able to start cutting rates next year, as the market was pricing just until a couple of weeks ago, then I would expect, right, Brazilian investors to come back to equities in a big way next year. If not, and if the central bank keeps rates at near 14%, or even if they have to increase rates again because fiscal policies, right, are loosened, then I would expect them to come back and still be a seller of equities. So they've been better on the sell side, and foreigners better on the buy side for pretty much throughout this year.
And do people tend to trade the very large companies that would be like in an EWZ versus smaller cap companies? Where do people tend to most speculate in terms of local flows?
Yeah, no, great point. Similar to what we've seen in the US and other markets, I mean, energy has been the big outperformer this year, right? So we've seen Petrobras up until the elections, the stock was up over 70% year to date. After the elections, the stock has been declining, right? Given all the comments that Lula made about the pricing policy for fuel in Brazil, and they want to change that pricing formula going forward. That's why the stock has performed poorly. But when we look at what drove the market year to date, it has been all about large caps, not only Petrobras, but also the large banks, and also the other large commodity producers and utilities stocks. Those are the ones that drove the market higher. When you look at small caps, the index is down 15% year to date. So we've seen a major underperformance of small caps relative to large caps this year. And it was the same last year as well. So we do think if in 2023, we do see interest rates coming down in Brazil as the market was expecting and pricing, then small caps can be a very good trade for Brazilian investors because they are less exposed to the global cycle, right? So if there is a recession in the US or a recession in Europe, they're more domestic oriented. They're trading at a big discount relative to the market, and the market is already cheap. So Brazilian small caps are even cheaper, and they would certainly benefit a lot from lower interest rates. So I think that outlook and what happens to local rates will definitely be a big catalyst, or not, for the small caps, because they've been a huge underperformer.
And it doesn't sound like that move in large caps has been PE expansion. Has the valuation stayed fairly low as like Petrobras in particular was going higher?
Correct. Yeah. So we've seen the markets staying pretty cheap, around 7 times earnings, pretty much throughout this year, and earnings have been quite good. I mean, the last earnings season, this earnings season, right, that just finished, we saw over 60% of the companies beating expectations, which is a little bit lower than in Q2. We saw around 70% of the companies beating expectations, but it's still a good number. I mean, we haven't seen earnings downgrades post the earnings season yet. I mean, the earnings have been fairly good on average. Of course, there are always exceptions, but on average, the earnings season has been fairly good.
Let me reset the room for everybody that's here. And again, my name is Michael Guide here with Fernando Ferreira. This will be a podcast under Lead Lag Live. And as usual, appreciate those that keep supporting these daily Twitter Space efforts. Let's dig down a little bit, Fernando, as far as those 3 main sectors: financials, the commodity side, and then utilities. I'm going to assume, because it makes sense given just broader flows, that most of the flows probably went to, as you noted, energy stocks, the commodity plays. Of those 3 major buckets, which look the most attractive from a fundamental perspective as opposed to just pure momentum?
So I still like the commodity space, despite the very strong performance we saw year to date. When we think about what's going on in China, right? If China does reopen next year, and if, let's say, if consensus is right that China is going to grow 5% their GDP next year, like, I'm not sure if that's the number, or that's going to be the number or not, but that's what consensus has today, 5% GDP growth in 2023, then I would certainly expect a very strong support for commodity prices. So I posted a couple of days ago, if we could see an unusual scenario of of a recession year in Europe and maybe the US, and still strong commodity prices, right? I think the framework that people are using and comparing the current scenario to 2008 is not a great one in my view, because I think the world is completely different today, and if we don't have any systemic risk event, right, I certainly see very tight supply demand balances, right, for most commodities. So if China does reopen, that's probably a more important driver for commodity prices than what happens with the Fed or right or in Europe. So I think that could be a strong catalyst for commodity prices. And even if commodity prices stay where they are, let's say, or if there's not a major decline, commodity stocks are still trading at very, very low multiples, right? So we're seeing 2 times EBITDA, 3 times earnings, that kind of valuation that we haven't seen really in over a decade, right? We haven't seen that kind of P multiple in a very, very long time. So the companies are generating a ton of cash. Free cash flow yields are super high. Petrobras, for example, this year they're going to pay over 40% dividend yield. Is the highest dividend payer in the world in this year is going to be Petrobras in terms of dividend yield, because they're generating a ton of cash and they're paying it all out in dividends. So it's certainly still like the commodity space going into next year. Banks is also a space that should do well, because if rates remain high, right, they'll be fine, right? They're not going to be impacted. So I think banks is a sector that will do well, right, irrespective of who won the election. So I continue to be optimistic on the space. There is a risk that if rates go up even higher, even more, and if the economy starts to tank, right, or if the economy starts to slow down, then banks could face an NPL, right, increase scenario that could start impacting their books. But so far, the NPL metrics have been quite solid, and banks are in a good position. And utilities still a very defensive sector, right, protected from inflation. So it's more of a bond-like situation there with utilities. So it definitely depends on what happens to the long end of the curve, and if the long-dated rates in Brazil stay controlled or not. At the moment, right, we're seeing long-dated rates go up because of the fiscal, right, discussion and the fiscal risks that we're facing. No, great points. On your first topic, in demonstrations and protests are still happening, right? Even 2 weeks after the elections, we're still seeing protests happening every day in Brazil. They've been reducing in size in the last couple of days, but they're still happening. And the current president, right, Bolsonaro, he's been quiet, so he hasn't appeared much, hasn't spoken much recently. So I certainly believe that the risk of further demonstrations and strikes, and especially related to the truck drivers, right, which are a pretty strong supporter of Bolsonaro, that's still a risk that we should keep under consideration, because if there is a general strike, or if the protests escalate from here, certainly we can see asset prices suffering as a result, right? If we do see that sort of like large scale demonstrations or large scale strikes. So far, they have been contained, I would say, and they've been in relatively small size, but it's certainly something we should monitor and keep an eye on in the event that they do escalate from here. So it's certainly something we are monitoring. And on your second question, you're right. I mean, during the first term of Lula, that was when China was growing double digits, right? China was growing over 10% in that period in the early 2000s. And that definitely benefited Brazil quite a lot, right, from the very high commodity prices and the super cycle on commodities that we saw. As I just mentioned, we are still positive on commodities. So we do see a tight supply-demand imbalance for commodities. But there is a chance, or there is a risk, that commodity prices, right, don't go up next year, or they decline if there is a deep global recession. And I think that could exacerbate the fiscal risks in Brazil, because if the government revenues, right, are going up because of higher commodity prices, there's certainly room for the government to spend more on social programs, right, and that makes everybody happier at the end of the day, right? If for some reason commodity prices go down and that impacts, right, the tax receipts from the government, will they still, right, keep the same promises? Will they still keep the same expenditures in place? If that's the case, if so, then we could see even bigger deficits, and the market asking for more premium, right, to hold Brazilian assets, which means higher rates, weaker currency, right, and at the end of the day, lower equity prices as well. Yeah, certainly there are a couple of ways to protect. One of those ways is definitely to tilt more towards the commodity exporters, right? They certainly benefit from a weaker currency. Another way would be to hedge the currency exposure, right? And to be long Brazil in a currency hedged manner, which is a right a bit expensive to hedge, but it certainly makes sense if the currency is too volatile. But the value toward relative to growth bias, I think it also makes sense to protect the investors, because the value names in Brazil, or the values, right, sectors, they are still trading at pretty low multiples, which I think already price in quite a lot of bad news. So that's another way to protect investors. But certainly I would expect more volatility for the currency going forward. Not necessarily the currency will go much lower from here, because, as I said, it's very expensive to short the real, right, given the level of rates. But we'll have to monitor, right? I think this whole debate on fiscal policies and where they go from here, I think will continue to bring volatility to the currency. Yeah, no, it's a similar situation. I would say that we are seeing higher unemployment figures amongst the youth, but in terms of the overall rate of unemployment in Brazil, it has come down quite a lot in recent years. So now it's below 9%, I think, slightly below 9, which compared to where we were during the pandemic, which was close to 13-14%, if I'm not mistaken, it has definitely improved quite a bit. But it's still not low, right? I would argue that 9% is not a great figure. Obviously, it's been trending to the right way, right? It's been trending down, but it's certainly not a low figure, right? Having close to 9% unemployment rate. And no, certainly it has been improving the whole infrastructure network and logistics to export all of those grains out of the the center west of Brazil, but it's still expensive and it's still challenging, right? So the main corridors are either to bring those grains south, right, towards the ports in the south, and that usually happens either by truck or rail, or to send them up and send them through the rivers, the Amazon River, with barges, and then export from the north part of the country, right, through ships as well. But it's still, even though the logistics has improved and there are better options, they're still quite expensive, right, for the farmers, which means that there is a big discount that is paid by the grain elevators, right, by the grain trading firms, when they buy the grains directly from the farms in the Midwest relative to what the prices are at the port or at the exchange level, right? So it's still quite expensive. So there are plans to improve rail network in Brazil and to invest quite a lot of money in the next couple of years to improve the access, right, to more ports and more regions in Brazil. But it's the first time I hear actually this plan of integrating the rail network with other countries in Latin America. I think if it happens, yeah, that'll probably be good news, right, in terms of having better access to more areas, because that's the problem that the ports face. Is at the same time, right, a few ports they receive quite a lot of volumes, and that can clog, right, the whole logistics systems during a couple of months of the year. No, I think that has very low probability, right? We're seeing a very tough economic situation in Argentina. So yeah, I wouldn't expect anything in terms of further integration of the currencies or more policies. The country is an important partner for Brazil in terms of trade, but I wouldn't expect further changes, especially on monetary policies.
Aside from, I know obviously the focus is on Brazil, but what other parts of Latin America are you seeing are getting more interest or maybe getting more attractive? I mean, you can buy a broad Latin America ETF. You can go granular to Brazil, obviously, but what else are you seeing outside of Brazil?
Sure. So Mexico is a country that I'm seeing quite a lot of interest from investors, and it's a different situation relative to Brazil in the sense that it's not a big commodity producer, or it's not right. It's not for the same reasons that people are positive on Brazil, but a lot of investors believe that Mexico will be a big beneficiary, right, from the whole geopolitics situation globally, right, and they will attract quite a lot of FDI, quite a lot of investments, right, from multinationals, reducing their footprint and their exposure in China and other countries, and moving them closer to home, right, and it's, which is people are calling reshoring or maybe friendshoring as well. So that is definitely a point that investors have been quite focused on. But the government in Mexico is also a left-wing government, and what I've heard some economists saying is that, well, they could benefit even more than they are at the moment if the government was more pro-business or had more better, market-friendly policies. Let's put it this way. But certainly, it is a reason why investors have been quite positive on Mexico. I'd say the other reason as well is a very strong dollar, which certainly helps all the remittances, right, that are sent back to the country. They are a big percentage of the domestic consumption dynamics in Mexico, right, are helped by the remittances that are sent by Mexicans living abroad, especially in the US. So that's another positive. And in terms of the monetary policy as well, the central bank in Mexico also has been quite active in terms of raising interest rates, and that is also another factor why investors are positive on Mexico. I would say outside of Mexico and Brazil, investors haven't been very positive on the other countries. We have seen Colombia, right, electing for the first time a left wing candidate, and they are moving more towards left wing policies. So investors are in a wait and see mode in Colombia. Same with Chile, Peru, and other countries. So I'd say the major focus for investors that have been seen has been on Brazil and Mexico.
All right, so I want to go back to what you said before in terms of the foreign inflows, and you allude to this idea that it's more of a trade. It looks like less maybe long lasting. What would it take to have stickier, longer term money when it comes to those foreign flows? Is it just a function of maybe you need a few years for people to believe it because institutions have been disappointed, whipsawed over the last decade? What do you think is really needed to make it a more structural investment as opposed to a trade?
Yeah, no, great point. I think we need stable economic policies, right? We need to see an environment where investors, they feel safe about investing in Latin America for a long period of time, meaning not only the flows in financial markets, but also FDI, right? Also like the companies, right? Multinationals investing, that because that's a long-term sticky money, right? But certainly it comes down to having a stable government, which Brazil has, a stable democracy, which Brazil has as well, but stable economic policies, which is still unclear, right? We've seen back and forth and lots of changes in the last couple of years. So I think for that money to be sticky, as you said, investors have been hurt, right, on Brazil in recent years. So we need to see those more stable economic policies and a resilient economy, and certainly investors will come back with more, let's say, more structural, more long term investments. It always starts with the trade, right? To be fair, to be honest, right? Those trends, they always start with the trade, and to change towards a sticking investment. It's certainly having a more pragmatic, a more long term oriented economic policies, then the money will flow, certainly.
Yeah, and I also think, I mean, it goes back to also what you said before. I mean, part of this is a growth versus value dynamic, right? So if the tech sector is going to be a laggard because of higher rates, which shifts the money flow stylistically from growth to value, you probably need to have a broader allocation mindset of that, because once you have that, then Brazil can fit within that allocation, right? But I do think these higher rates probably make that more likely than not.
Yes, that's true. And let me ask you, Michael, what's your view now on markets and your thesis of a melt up? Do you think it still holds? What are your current thoughts on the market?
Yeah, I mean, this is just more very short term. I said yesterday that what happened was actually, I think, pretty meaningful, but it's only just one day where it looks like more classic, risk off behavior, right? And you have to always consider the possibility that this crypto collapse, maybe, I think it's very low probability, but it's not zero probability, that the crypto collapse could result in a tail event outside of crypto. If that doesn't happen, and yesterday almost smelled a little bit like that, just given the treasury move. If that doesn't happen, and I think it's likely that it won't happen, yeah, I think that you still have a broader melt up scenario in place. I mean, part of the excitement here in the States is around what could be, finally the peak in inflation. In Brazil, I'm going to assume that your inflation probably is rolling over too. What's the state of inflation there? Because it's all the same argument. If you're going to have a melt up, it means cutting off the tail risk of further spiking rates so that you have stability in the bond market, so that it creates enough maybe false sense of confidence that things will be okay, which means equity investors, get confident.
Correct. And probably not a catalyst for the market to go down, right? And probably a lot of institutional investors window dressing for the end of the year, right? So you create a scenario where the market can continue to trade well.
Yeah, I think the thing is, as you know, unfortunately, people, they want to know what the call is. And I always go back to, it's about conditions and probabilities, and conditions are always changing. I still think the probabilities overwhelmingly favor, a surprise move higher in the context of a broader bear market. Although it's interesting because you could have a bear market in the US continue. I would argue that you could have a bull market in Brazil and emerging markets while the developed economies still linger, because the emerging economies have been earlier in their cycle than the developed ones. So that could be an interesting story for next year, I think. We'll do one last question. Everybody here, please make sure you follow Fernando Ferreira. And Fernando, at the end, I want you to give an opportunity for people to follow your research.
The themes we like in Brazil at the moment, first is commodities. I think I've spoken a lot about it during our chat. Second one, secular growth stories, right? Or companies that can grow irrespective of the macro scenario, so that they have, right, their strong dynamics of growth. So those are mostly domestic consumption names and companies that, like pharmaceutical companies, some retailers in there, but really high quality, let's say, secular growth stories that are not trading at insane multiples, right? So those sort of sectors. And the third one, it's more of a value tilt or quality at a reasonable price, as I'm calling. It's not a GARP, but it's a CARP, right? So quality names that are trading at pretty cheap multiples, like the shopping malls, for example, in Brazil, which have been hurt by the pandemic, then higher rates, and they still haven't recovered to their pre-pandemic levels, but the companies are in a very, very good shape. So shopping malls in Brazil is different than the US. They're not facing many structural issues because of Amazon. So yeah, those are the spaces we like. At the moment, consumer discretionary is the one that it's mostly challenged, right? Given they're very sensitive to higher rates, very sensitive to macro. So sectors like real estate, e-commerce, and more of the expensive growth names, those are the ones that we dislike at the moment, and we haven't touched that sector for the entire year, right? The home builders and sectors like that.
Fernando, for those who want to track your research, your thoughts, aside from Twitter, what sources are available?
Yeah, so I'd say Twitter, LinkedIn, and also we are about to launch a platform for our research in all in English. We're going to launch soon, and I'll keep you posted. I'll post it on Twitter, the links, once we launch that platform.
Thank you, Gary, for joining. Make sure you follow Fernando Ferreira here. Again, this will be a podcast soon enough, and enjoy the rest of your day. Thank you, Fernando.